We've got to begin, of course, with this massive plunge on Wall Street. Here to discuss, David Nelson, Belpointe Asset Management Chief Strategist, Peter Cecchini, Cantor Fitzgerald, Market Strategist, and Phil Flynn, Price Futures Group Analyst. I'm going to start with you, Peter, since I botched your name here a little bit.
No, you did well. You did well.
You guys, you kind of saw this coming. You're a global market observer. You saw this kind of coming in part because of the sharp move in interest rates. Everyone had been talking about it. To me, 2.5%, 3% isn't a big deal, but I guess it was the rate at which they were moving.
Yes, that's absolutely correct. It was not only the rate, but from the very low level that they started to rise. And in fact, we hadn't really observed a lot of interest rate volatility, especially on the short end of the yield curve. So 2-year treasuries rates had not increased very much until about September or October of last year. And they went up about 1% from about 165 or 170.
To the layman out there, you know, the 40-year-old, bus driver and his wife and maybe a police officer, they've got a 401k. What exactly does that mean to them? Because right now they're kind of worried about, hey, what do we do next? Because no one has ever seen an 1,100-point drop on the Dow Jones Industrial Average.
Well, we expected it for a reason, but that doesn't mean that it's necessarily going to persist. So our feeling is actually that the move in the markets today particularly was a washout, and that it was an overreaction to the move in rates. And the good thing is this: when you get a lot of market volatility, people start to buy treasuries again and rates stop going up. So there's this reflexive move back into treasuries, which takes away the very reason that people started to sell in the first place. And so rates, in our view, will stabilize, which should stabilize equities. And in fact, the fundamental backdrop, as you alluded at the top of the hour, is fairly robust. We have decent growth in the U.S. and globally. And so overall, we're actually still bullish.
And we should point out the 10-year yield actually pulled back, I think, 6 basis points at the close?
It did.
Okay. And David, you and I just had this conversation last week. We both were pretty optimistic, even though knowing that these sessions come. It's a lot different, though, when you're in the eye of the storm. And the numbers are bigger, right? I mean, we're at a 4.5% decline. It's not the biggest ever, but we've never seen these kind of numbers before, and this is what people are going to be focused on. Tomorrow morning, it's going to be in the headlines of every newspaper.
Yeah, and, 1,100 points or even 1,200 points, that's a big number, but obviously on a percentage basis, it's a lot less. Look, you hit on some of the positives. The economic backdrop is very good. The earnings backdrop, the sales backdrop, that's all really good. But the fact that the rates have moved up, therein lies the problem, because that means multiple expansion is no longer with us. Valuations matter again. And every now and then you get punched in the face. And, today the Bears put up some, points on the board. But this will wash out. This is a process. And the fact that the VIX got as high as it did, for me, that's a good sign.
The VIX, again, that being it's a contrarian indicator for you, the
it's
so-called fear index.
And we went through
So you wanted to see people be afraid. You wanted to see a sort of the lack of complacency was a problem for you.
Short of the flash crash in 2015, it was the highest in, a pretty long time.
Phil, in these kind of markets, people are looking for places to hang out. Gold, of course, got a little bit of a bid today, but crude oil down. Commodities have been sort of leading the way, in part to global demand and other things, but not a lot of places to hide out in your neck of the woods either.
Yeah, there really wasn't today. Under my bed was probably the best place today to come in today. But yeah, you're right. It looked like a bloodbath. But when I look at like the sell-off in crude oil and the lack of movement in gold, those are actually positive signs to me. I think if you look at the relationship of where crude oil prices are and where the stock market has been, they're actually out of whack. I think oil prices are actually cheap based on what we're seeing on economic growth and the enthusiasm in the economy. I think that the market is selling off today because what every analyst and what every Fed official in the world have been hoping for, and that is rising wages, a better economy, and signs of inflation. So that's not all a bad thing. So I think it's a good thing that we saw a correction.
Yeah, Peter, it seems counterintuitive to the average person that we could be doing so well, and that would be detrimental to the stock market.
Yes, well, there are two things. I mean, there are the fundamentals that underpin earnings and growth. And so if companies are generating cash flow, that should, generally speaking, they're generating it at a higher rate. That should be a good thing for stock prices. But the problem is that when we value stocks, we also have to use a cost of capital to discount those cash flows. And that cost of capital is exactly what interest rates rising affects. And so that's to your other guest's point of earlier. We don't have the tailwinds of expanding price-earnings ratios.
My question to that is, does any of this change the calculus for the Fed now? I'm going to expect actually several Fed governors over the next week or so to try to calm the markets and walk back some of the rhetoric.
Fed governors, what about Jay Powell? That's his job. I mean, he started today, an auspicious day to start, but
everybody gets
not
tested.
unlike Alan Greenspan, though, right, who started under similar circumstances. He's got to sort of make or break it right now to a degree. He's going to have to say something at some point.
I don't know if it'll be him, but I think the people that work for him,
really?
A lot of the Fed governors will actually come out over the next week or two and actually start to
I think the street would want to hear from Jay Powell. By the way, a moment ago we had the futures up, and it looks like we're getting a little bit of a bounce now, but I think the ultimate test is on the downside, holding, testing it, and then going back up. We'll see. Gentlemen, thank you all very much.